Friday, August 16th, 2019, Maneco 64, home of alternative economics and contrarian views. This morning I want to talk about a few subjects. Before I start though, I like to say that with gold breaking out, with new subscribers, new viewers, and I get a lot of questions, where do you buy your gold? And I'm in the UK, and I've done this before. I'm not recommending people buy gold. They need to do their homework and decide whether they want to do it. I've been accumulating gold and silver, physical gold and silver, since 2002. One of the dealers I use is in London called Gold Investments. They provide me with a promo code maneco64 with which you can get a 0.5% discount on your purchases. That's in London. It's a family-run business. They've been around since 1981. And there's also, for my viewers all around the world, the new Glint card. Well, it's not new in the UK. It's a MasterCard which allows you to actually store gold in Switzerland. And they have an app, the Glint app, where you can have gold locked onto your card. You can have dollars, euros, or pounds onto your card, and you can spend that as a prepaid debit or MasterCard. Glint launched recently in the US on the 29th of July. They've been around in the UK since last year. I have a Glint card. It's a way of trying to put a little bit of gold or as much as you want, of course. One way to do it is to put it when you get your wages, and if you think you're going to have something left, put it there. You can buy as little as $1 worth of gold. So it's an interesting way to buy gold. I still prefer, of course, holding my gold physically, but this is an alternative. And I have a referral code for them as well. It's Mario Glint 79. That's the referral code, Mario Glint 79. So if you're looking also to have access to your gold, to be able to spend it, and some people might ask, why would you want to spend gold? Well, I lived and grew up in Brazil in the 70s and 80s. And I can tell you, dollar was as good as gold then. And a lot of people held dollars, but sometimes you had to sell those dollars to have some spending money. Not all the time, of course. So those are the two ways that I do it. I'm a traditionalist. I like having my physical gold. Glint is a new way to actually own gold, in my opinion. It is slightly different than other competitors. I've used other competitors' cards, and I have to say I prefer Glint because it's more user-friendly and it's a lot easier to use than others. So that's what I wanted to say. So this morning, I like to talk about a few things. First of all, the yield curve. A few days ago, there was talk about the 2-year to 10-year inverting briefly. But yesterday, I saw that the 1-month T-bill yield was higher than the 30-year T-bond yield at the close by 5 basis points. And as you can see here in this little chart here and of all the yields, that's the shortest that people keep track of, the 1-month yield, and the longest is the 30-year T-bond yield. So that inverted yesterday, and that's significant. The curve is continuing to invert. Yes, we've had the 3-month and the 10-year. That inverted last year, late last year already. This inverted a few times. The curve is yield curve, the bond market continuing to point to trouble ahead for the economy. And it's not the bond market that's putting the economy in trouble. You kind of read things that the stock market is going down because of the yield curve. No, I think it's a symptom of an economy that's slowing down quickly. As in you can see here, The yield curve dropped quite a bit yesterday. Again, the yields, that means bond prices went up. The 10-year yield got down to 150. You can see the 30-year got down to 196. The low was 192. And the 1 month was at 2%. And there's the inversion there. So that's really a bad sign. It's a sign that people, investors, are not comfortable with what's going on in the economy and the markets, and probably monetary policy either. I think the central bankers, by going back to cutting rates and talking about doing more QE, have spooked investors. It's had a very negative effect. So, and now I want to show you as well some longer term charts of gold. And today I'm going to cover the markets at the end. So longer term charts of gold that I think are really important. I don't trade gold at the moment. I have traded in the past many years ago through the futures. That didn't mean I didn't have physical. I had physical, but I was doing some trading. But that was when I worked in the city and I had time to keep an eye 24/7 almost at the markets. I traded very short term. I had like a core position that I kept, and then I would trade intraday. But now I just hold on to my gold, and I think that's the best thing for me. You need to decide what the best thing for you is. So this is a very long-term chart. It's a monthly chart. Going back to the low, the secular low in 1999, I think it was around $252. And I've taken the all-time high at 1921. I did a Fibonacci retracement analysis. And you can see here that the 50% retracement was 1,086. And you can see how it held well there, even though we did trade down to 1,046 in December 2015. But it held quite well. And then the 38.2 retracement, you can see that there's quite a bit of activity throughout the years around that level. This is what technical analysis says, that there's a lot of activity between the 50 and 38% retracement. And that's what we got with gold. And you can see now that we are at the 23.6% retracement, which is another Fibonacci level. Not as important, I would say. And that's right around where we've been recently, 1527. Also happens to be the lows there in 2012, 2013, some key levels when we topped. Once we broke through that level, you can see there in 2013 how the market dumped when we broke that 1525 area. And now another gold chart. It's the same chart, but looking more at the move we've had since 2011, the high in 2011, the low in 2015, December 2015, and 1,046. And I've done a Fibonacci retracement there, and you can see as well why that 1375 was so important. The 38.2 retracement of that move is 1380, and I had that level. I made a video about that prior to the market breaking out. I'm not trying to brag or anything. I'm just telling you because I'm not right all the time. Anyway, yeah, you can see why that 1375, 1380 was so important now. The 50%, we're above it. It's 1483. So interesting chart. And then you've got the 61.8. You can see, can't see it very well here, but it's around 1587, I think, just below 1600. So just wanted to show you that. I think precious metals are gonna remain quite firm. I think what we're seeing now at the moment is a bit of consolidation in the markets, in the precious metals. As I've said many times, markets never go up in a straight line. They never fall in a straight line. The other thing I wanted to quickly talk about is this YouTube channel that I really enjoy. It's called Belen GP, BELANGP. He talks about a lot about markets, precious metals, the monetary system. I highly recommend you watch his videos. He doesn't do as many videos as I do daily, not very regularly, but the videos he does are really good. Recently, the latest video he did was about making the long term more predictable. He talks about what weighting he uses for his investments between the stock market and precious metals. Very interesting. I recommend that. But the one I wanted to talk about is a video I watched yesterday, and it's from 10 months ago. It's called The Modern Day Feudal System by Belen GP. And he talks about who's really ruling us. And he talks about taxes, politicians, bankers, and the CEOs and the stock market. I highly recommend it. And the reason I like this is because Belen GP talks about how he tries to avoid being a modern slave or serf, right? And I liked it because he has kind of the same strategy as I do. And his strategy is to try to deal with these people as little as possible, try to live a more simple life, try to borrow less, try to spend less, try to live within your means. And that's why I like this video. I'm going to put it up in the cards, and I'm going to put it down in the description for you to watch. And yeah, I highly recommend Belen GP, and I think you should subscribe to his channel. He needs more subscribers. He's only got 11,000. So now to the markets. It's 7:56 a.m. London. So we've got spot gold here down $8 at 15.15, down 0.5%. Range has been 15.12 to 15.28. Silver is down 6 cents or 1/3% at 17.18. Range has been 17.14 to 17.35. Stock market, yes, markets did rally back yesterday. The Dow really was the big mover. It was up just under 100 points after that 800-point drop. NASDAQ actually was in the red. S&P was up 7 points. So yes, the markets are rebounding a little bit right now. Stock markets. This morning, the Dow futures up 130, 0.5%, 25,700. S&P is up 15, 0.5% as well, 2861. And the NASDAQ is up just under 1/4%. NASDAQ 100 future, 75.37. Sterling up again here, 1/4% at 121.20. Euro is at 111.01, unchanged. Dollar is unchanged against the yen, 106.12. Also virtually unchanged against the yuan, 705. WTI crude is up over 1% at $55 exactly. Brent is at 58.61, also just up over 1%. Finish off with the bond market. Yeah, yields are up a bit here. We're at 155 in the 10-year yield. Yesterday, what was the low? Let's have a quick look. Yesterday it got down to 148. So yeah, bond markets, even though the Dow gained yesterday, continue to show signs of distress in the system, in my opinion. The 3-month right now is at 192. So yeah, the curve is still very inverted by almost 40 basis points. The 3-month to the 10-year. The 1 month right now is at 206, and the 30-year is at 201. So that's rebounded as well. 1 month to the 30-year is still inverted. So that's another bad sign. If you enjoyed this video, make sure you hit the like button. Make sure you share this video far and wide as well if you think others would enjoy this kind of content. Make sure you also hit the little notification bell above to be notified of all my new videos. And you can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.